Welcome back, guys. Maybe FX here. Today, guys, I have a very important announcement at the end of this video. So I advise everybody to stay tuned and watch till the end, so we get to the big announcement at the end. So today's video is going to be about institutional candles. So that's a very important topic today that we're going to go over. So I'm not going to waste anybody's time. We're going to get right into it and talk exactly what are institutional candles and how do we identify them and how does that help us in trading, because this is a very important topic when it comes to trading, and it's one of our key 5 elements of finding the trades and the strategy that we're using here in Smart Money Concepts. Okay, so I'm going to get right into this example right here. Okay, so guys, as you always know, that what we do first is just we identify the trend. Okay, we want to see where the trend is going, because as you guys know, the trend is your friend. So if you guys know exactly where the trend is going, then you can actually dig deeper and see where exactly is these candles that we're talking about. Okay, so first of all, what are institutional candles? So institutional candles are areas or candles that have a lot of money, areas that have been have a lot of significant area of push. Okay, so they're areas that the last time that the banks bought before selling or selling before buying. Okay, and institutional candles can be in the form of a few candles. Okay, so we call it a few candles. So it's the candle that takes out money. So if you guys see something like this, so say a trade is consolidating, you're gonna have a lot of money generating here. Okay, and generating below as well. Okay, so institutional candles normally happen when they go up, grab money, and then crash down and grab the other pool of money and retest and break and continue going lower. Okay, so we call the candle that goes up and takes the money and crashes down and start going towards another pool of money, we call that an institutional candle or an FU candle. Okay, so there's a lot of forms of institutional candles that you can find, where institutional candles can be a continuation institutional candle, where you can find it like this. Okay, and then you're going to see a candle coming back down and another candle going back up. Okay, so it'd be like up, down, up, and this candle right here, okay, will be an institutional candle, and this candle that we usually highlight as well to enter off when we are on the trend. Okay, so there's few types of institutional candles. So there's the one that's an FU candle that goes up, okay, goes down, takes money, and then crashes down. And then we have our second institutional candle, which is a continuation institutional candle. We can enter off every time the banks retrace. So if the banks retrace into previous areas of institutional levels, that's an area that we normally take. I don't know why this text period coming out. Sorry, guys. So if that area, if the price goes back down to this, we're in and we're up. Okay. So and the third institutional candle that I would like to show you guys is the engulfing institutional candle. Okay. So this normally happens at the bottom of a low or a high. Okay. So let me explain exactly what I mean by that. So say that you had an uptrend. Okay. You had an uptrend. Normally the institutional candles that we love to enter off at an uptrend are always going to be down, okay, below the 50%. So if you draw your Fibonacci, okay, right, we love taking institutional candles that are always below the 61% level. So 61% all the way to the 88.6. Any institutional candle that is between these levels, we would love to enter from if it's on an uptrend. And that's a key secret right there. All right, any institutional candle at an uptrend or a downtrend, okay, so same thing with a downtrend, that's below or above the 61.8. And between the 61.8 and the 88.6, we would love to enter off. Okay, same thing, any institutional candle right here, okay, we would love to enter off. Okay, all this level right here, same thing right here as well. If we find any institutional candle up and high, so what we actually are waiting for is a retracement into these levels, so we can enter off. So same things like a retracement to these levels, so we will sell and continue our trend. All right, same thing here. Okay, so that's just to give you a little example of what we're talking about today and what are institutional candles. Okay, and these candles are so highly reactive and they work 99% of the time. Okay, so these are very, very important. So I'm going to go ahead now. I'm going to show you how do we actually use them in the market. Okay, so we start off by marking up the trend. So we go ahead and mark up our trend, which is now is bullish. Okay, that's correct. All right, so we have a bullish trend. All right, obviously we do see this area that's been captured, etc., etc. So that would be a pool of money that's being grabbed. Okay, so you probably be able to see it on the daily. Okay, as you see in here, that's an institutional candle that went up. Okay, all this money's being grabbed. And what did I say that happened as well? Same thing as I said, right? Price consolidates, pushes up, grabs all this pool of money, clashes down, comes back up into that last up candle before a big down move, and sells off. Beautiful, right? And don't forget, you can apply this at any time frame you want. So this is on a daily time frame, and that's a very, very high probability trade because it's on a higher time frame. Okay, so exactly like that. All right, money's being grabbed here. Okay, we see this institutional candle right here. Okay, push up, grab the money. Why is that an institutional candle? Why? Because it's the last up candle that grabbed the money before clashing down. And then we do see the price went back up into that level because what did the banks do? The banks need to retrace. Okay, so after grabbing a big pool of money, what did the banks need to do is actually retrace to the last time they actually bought before selling off. Okay, so they need to buy back up their orders and release a lot of orders right here, tricking the traders that thinking, oh, they're buying back up. Well, the opposite is actually happening. All right, so now we know that the banks are buying back up, and now we're selling off. Okay, so now the phone is only about to start. Okay, so this is only us noticing this on a higher time frame, and then we can actually enter off this and hold it for days and days. Okay, that's beautiful. But now let's dissect this. All right, let's go even deeper and see where exactly we can actually even enter more and more and more and stack trades upon entries, okay, with such an ease. Okay, obviously timing is what got to do with institutional candles, but that's not a topic for another video. There's a lot of videos go through that. So now here the fun begins. Okay, so we did identify the big institutional candle on the daily. Now we're breaking it down on the 4 hour. So I do see that we're still in an uptrend, but I do see we're going to break. Where's the next pool of money? Right here, correct? Because that's the recent low. That's where the biggest money is at. Okay, so we want to identify a pool of money that the banks would love to go to. Okay, and our job is then to anticipate that and get an institutional candle. So I anticipate there's going to be a breakout in that upward trend. Okay, to grab this money, and then my job is just find an institutional candle that I would love to enter from. All right, so let's see what happens. Okay, the price is beautiful. Okay, we do see that we have an institutional candle here. That's an engulfing one, right? But let's see if it takes a pool of money though. Okay, beautiful. So what happened? It came back up, all right, into that previous area of institutional levels, crashed down. Okay, so where is the last institutional candle that went up, clashed down, and took money? Where's the last time that the banks bought before selling off and grabbing money? That's the question right now. Okay? Think about it. I'll give you guys 2 seconds to think about it. Where is the last up candle before the big down move? Okay? Where's the last up candle before the bank sold off and grabbed a pool of money? Where's that candle? Okay? Yes. It's this candle. Correct. Okay? So this was the last up candle before the big down move after it broke the trend. So at this point, we broke a low. What happened? Automatically, whenever we entered the downtrend. Okay? So instantly right now, we're in a downtrend because we broke this low. And the last candle that broke that low before selling off was this candle right here. So this candle will be our interested candle that we would love to enter from. Okay, so we're gonna mark it up that we want to enter off it. I'll show you guys exactly what's gonna happen after that. So we would love to enter from this candle right here. Amazing, correct? So that's our area, and where's our next area of our pool of money? Right here. Okay, see all these lows right here. See all this pool of money. See all this consolidation, price bouncing off of these areas. There's a lot of stop losses underneath there, right? Okay, there's a lot of stop losses underneath there. So the banks needs to go down to these levels and grab the money. Okay, now we're using all our confirmation at once. So confirmation number one, we have the trend. Okay, there's another video that's explaining the confirmations and why I'm looking for them. So you can guys watch that video as well. I'm gonna go really fast through them. Okay, we have the uptrend. Okay, we have the breakout. Number two, number three, we have the institutional candle. That's it. That's all we need. Now let's see what happened next. All right, price flash down. All right. Okay, spike down. We grabbed the next pool of money. Beautiful. Now what did the price do? Beautifully went back up into that institutional level with great accuracy, pinned it to the pip. Okay, right, the accuracy. The beauty of this strategy that you barely have to use much risk. Okay, we only risk maximum of 15 to 20 pips. Okay, per trade. All right. So let's see what happens here. After this, what happened? Start melting off. Right, beautiful. Beautiful level. Okay, so now again, right, start melting and melting and melting. All right, amazing. So you guys get the point right now. See the way that it went back up into that institutional level because that was the last time the banks bought before selling off, and plus we had an inefficient price action right here. So the banks don't like inefficient price action, so they need to buy back up their orders before selling off, and that's what exactly the bank done, and they went down and collected all this pool of money right here. Okay, now what's the next target for them? It's probably these areas right here. Okay, these lows right here. Okay, always double tops, double bottoms, lows, highs are always targets for the banks to keep collecting money over and over and over and over again. Okay, and we can always use that as a chance for us to re-enter with these candles and continuation candles, etc., etc. We can keep using it over and over and over again. Okay, we can even start breaking it down to smaller time frames and see where exactly we could have entered over and over and over again. Okay, it's just a rinse and repeat process. He's got to find these institutional candles that we're talking about, like these. So see the way that it went back up into that institutional candle, slashed down. Now what we have to do is another one. Okay, went back in, sold off again. Okay, you could have probably sold off this again from the wick. Okay, came back into the wick of the institutional candle that touched the previous one, sold off again. Okay, you could probably enter 3 or 4 times on that trade. So what a beautiful setup just from these institutional candles. Okay, these institutional candles happen over and over again. Okay, you just gotta open your eyes to them and just let it sink. Okay, it's just that easy. Okay, obviously I have this indicator right here that really helps me find these institutional candles with great ease. But guys, it's not that hard to find these institutional candles and grab your eyes to it. Okay, let me show you another quick example right here. Right here. Okay, so all right, it's not much of a clear example, but if I can just okay. So we do see that, okay, the levels right here. See the way that, okay, this is more of a smaller time frame setup. Okay, so let me just go back. Sorry guys. And I'll go back to the setup to show you that we can actually enter more times in that initial sell right there. Okay, so okay, so we do see that a big institutional candle that went up. Okay, after this contraction period, okay, contraction period of time, okay. So a lot of money has been generated on this contraction, okay. What do we see? All right, just to show you really quickly that this happens a lot of time over and over again, okay. Contraction period, consolidated, money is going to be generated above, right, above these areas right here. What do the banks do? Push the price up, okay, push the price up, push the price down. Here's our engulfing candle, okay, that we love. Engulfing candles tell us that that banks are in play. That means there's a lot of selling pressure, okay. Goes back in, the price goes back into the institutional candle straight away, and then straight away smashes down. And if you guys notice, that institutional candle got created in our favorite time zone as well, at 6 a.m. in the morning, between 6 a.m. and 10 a.m. Okay, so 6 and 9 or 6 and 10 a.m. in the morning, that's the London Open. We love taking trades like these, okay? So if you're awake in the London Open, you would have caught this beautifully, okay? And that's what we focus on, all right? So to go back to the example again, to show you how we can actually stack more entries through the institutional candle, okay? Okay, if we go back here, okay, let me just go put this replay back into its place. Okay, cool. All right. Okay, perfect. So again, guys, all right, again and again. So what do we see here again? We see a nice institutional candle being created again, all right. So why am I saying that this is an institutional candle again? Okay, why is it an institutional candle? Because it's the last up candle before a big down move that took out a low. Okay, that took out a low. All right, right here, beautiful. Okay, so now we see that the trend is in a downtrend. That's confirmation number one. So there's no reason for us to look for buys. So we're only looking for sells. Okay, now we need to look for the evidence or an area that we want to enter from, give us that extra confirmation to go ahead and enter. So now we have this beautiful institutional candle that's giving us the excuse to enter on this downtrend. And now what happened? The price went back into it. Okay, back into it because the banks needs to retrace in a previous into a previous area that they bought before selling off. See that to the pip, and it continues selling off. Okay, beautiful, beautiful, beautiful setup, and then took out the low again. Okay, so we could have stacked this trade 1, 2, 3, probably 4. Okay, so you guys get the point from now. Okay, so you guys need to go ahead and now study this. Go back and study this. Go back and look back in the charts. I really recommend. I'm not a big fan of just backtesting. You need to use proper live data. That's what I believe in. Study live data, how the charts actually move live. Okay, wake up in the morning, whatever your time zone is. Wake up for the London Open. That's what I should recommend everyone to do. Okay, that's my personal advice. Okay, to wake up for the London Open, whatever you are in the world, study it, see where institutional candles gets created, mark them up. Okay, mark the engulfing candles, mark the continuation candles. Okay, see where they are, look for a target. If it doesn't take your checklist, you're not going to enter from it. Okay, if it's not a candle, if it's not the last up candle before a big down move that takes out a low or a high, or an institutional candle that the last down candle before the big up move that takes out a high, you don't enter off that. Okay, simple as. And your job is just to find these institutional candles, and if they're not there, they're not there. Okay, you don't need to be forcing any trades. And these setups are the most accurate setups that you can get in the forex industry. Any strategy that you can find, these are the most accurate strategies that you can find and use to trade in the forex market, which will allow you then to use smaller stop losses, use smaller risk, and have bigger profits and stack more entries and not be focused on where's my stop loss at, or am I guessing a trade, etc., etc. No, okay. So with this institutional candle method, okay, that you can use and add it to your trading, this is going to really help you level up your trading. Okay, so this is the only basics of what we talk about and what we discuss. So we do have a course and an academy that we actually go really, really in depth in and help our team and our clients inside there master this trading strategies and help them live with our signals and courses, mentorship during the week, etc., etc. So there's many ways and levels that we have inside our academy to level up our students that join us, and we're like a family in there. We take care of each other, and everyone is there is like a family to us. All right. So guys, before I end this video, I obviously had a little announcement I wanted to throw in with this video. So I am offering right now, okay, anybody that watches my YouTube channel, okay, a free call consultation. Okay, so anybody that's watching my YouTube channel right now, you can go down to the description, okay, go to the academy, okay, and message me. Okay, message me through the academy and send me a message, or join the free Telegram group chat, okay, and get in touch with me. And we're gonna book a free consultation call. I'm gonna go teach you some stuff from my knowledge and see exactly where you're going wrong and help you if you need extra stuff from trading and all that, and if you're qualified to be part of the Trade Life team. So with that being said, I really appreciate everyone watching this video. Don't forget to leave a comment and a like, and if you haven't subscribed yet, please go and subscribe. Show some love. So guys, peace out and see you at the next one.